Good morning, Chamber friends. This is Molly Grover with the Dubuque Area Chamber of Commerce. Thank you so much for joining us for our first ever webinar, one of what we hope to be many more. We are so grateful to be joined this morning with John Kirchner, the Executive Director, the Midwest Region, Congressional and Public Affairs Division of the U.S. Chamber of Commerce. John is joining us this morning from home in Minnesota, and he is a longtime friend to the Dubuque Area Chamber of Commerce. And I want to share John's bio with you before we get started. John Kirchner, Executive Director of the Midwest Region in the Congressional and Public Affairs Division at the U.S. Chamber of Commerce, represents the Chamber throughout the states of Iowa, Minnesota, Nebraska, North Dakota, South Dakota, and Wisconsin. Kirchner helps develop and implement the Chamber's grassroots legislative and political activities in the area. In addition, he works closely with state and local chambers as well as with members of Congress in his region to further the legislative priorities of the Chamber. Previously, Kirchner spent 8 years as public relations manager at Marvin Windows and Doors, leading the company's public affairs and corporate communication efforts. Before that, he was the political director for the Minnesota Republican Party. Kirchner received his BA in political science from St. John's University in Collegeville, Minnesota, and now resides in Edina, Minnesota. It's my pleasure to introduce our host this morning, Mr. John Kirchner. John, take it away.
Thank you, Molly. Thanks for having me today. Thanks, everyone, for joining us. I'm going to walk through today the Federal CARES Act, also known as kind of the Phase 3 bill that the President signed into law last Friday, a week ago. I'm going to do my very best to be as thorough as I can, and when we get to the question and answer period, we'll do my best to answer all of your questions. But I don't want to give anyone a bad answer, so if I don't know, I'm just simply going to say I don't know, and then Molly and Barry will keep me on track and make sure I get back to them with that right answer. So we will make every effort to get you the answers you need if I don't have them. My other caveat is that I, like all of us, are working from home, and I have 4 kids and a dog here, so if it sounds like a crime is being committed behind me, you're probably right. So I hope that won't be too disruptive. So with that, we'll move to our first slide here. I don't think I have control of that though. We'll go through some of the major provisions here, just a quick overview. It's a $2 trillion package. Just to give you a sense of how big that is, that's about 10% of our overall gross domestic product for our country. So it's very significant, obviously. But it also has the potential for an additional $4 trillion to support for the economy. The Federal Reserve has some opportunities. It can leverage some monies for additional lending up to about $4 trillion. So that's very significant as well. Again, this is kind of referred to as the Phase 3 bill, and the focus of this bill, we'll talk a little bit about Phase 2 later. The focus of Phase 2 is very much the employees and those people who are affected and needing time off and getting paid. This one is very much about business, small business in particular, and how do this is kind of the bridge that we're building for when our economy is ready to turn back to normal commerce, that everyone will have the liquidity they need just to get back to business. Some of the automatic payments to individual taxpayers on the individual side, there was a little bit there. You've probably heard a lot about that. $1,200 per individual, $2,400 for a joint return, plus an additional $500 per child. That is going to be phased out for incomes above $75,000 or $150,000 for joint filers. So those checks should be, or those amounts should be starting to be deposited as early as I think next week or the following week. Direct deposited into accounts for those have direct deposit with the federal government, and for those that don't, they'll be sending checks out. Not sure on the exact timing. They're still working on that, but that was important on the individual side. Also of note, expanded unemployment. You know, we had over 3 million people file for unemployment last week. The numbers came out this week, whereas over 6 million. So basically in the last 2 weeks, we've had 10 million Americans having to file for unemployment. And so as an effort to help them, we've expanded the unemployment, or not we, the federal government has. Most restrictions on eligibility are suspended if it's related to COVID-19. So if you're self-employed or sole proprietor, a lot of times you wouldn't qualify for unemployment. that has changed, and a lot of those restrictions have changed. The federal government's also providing an additional $600 per week on top of the regular state benefit, and this goes through July 31st. Eligibility ends when an individual can return to work, so there was some concern when this was drafted and being discussed in Congress that some folks might be making more on unemployment than they were working, and what's going to be their incentive to go back to work. The second that you as an employer open up your shop again or say, you know what, we're in a position to bring you back, their eligibility ends. So their eligibility for that extra $600 and that unemployment ends the moment they can return to work. And if they choose not to return to work, that benefit still leaves. And these benefits are provided through your state unemployment insurance offices. $600 from the federal government is going to them. All your state needs to do is raise their hand and say, yes, we will accept that money. That's it from here. We'll go to the next slide. Talk about businesses a little bit here. Major provisions for employers. We're going to talk a little bit about what's available to all employers, what's available to just the larger employers, and we'll spend the bulk of our time talking about small businesses and some of the new programs there. So we'll go to the next slide, please. Available to all employers, big businesses, small businesses, everybody in between, but all employers, not just businesses. This would also be for nonprofits, anybody else who would qualify as an employer. Payroll taxes, there's an opportunity to delay payment of employer payroll taxes between now and January 1, 2021. 50%, if you choose to do this, 50% would be due on December 31st of 21 and 50% due on December 31st of 22. This is not a payroll tax cut. This is simply a way to delay payment of your payroll taxes. So obviously you write a check to your employee for payroll. The next check you probably write is to the federal government for their payroll taxes on Social Security. And so you're able to delay those payments through, again, January 1st, and then you see where the 50% due is on end of the year 2021, end of the year 2022. This is, again, an effort, and a lot of these things, particularly for the larger employers and the tax changes, are about providing liquidity to these businesses that they're paying employees. So we can certainly see that the unemployment are going very high. To try to keep those numbers down and not put too much pressure on state unemployment insurance offices is to how do the federal government incentivize employers to keep paying employees as much as they can and keep them off unemployment. This is one of those ways of doing that. It's important to note that this does not apply to employers who have loans forgiven under the Paycheck Protection Program. We'll talk about that in a little bit, but it's important to note that if you're getting loans forgiven under the PPP, you won't be able to delay your payroll taxes. Other tax changes that I'll move through very quickly so we can get to the small business stuff. Net operating loss, accelerated recovery of AMT credits for those who use those, election to increase limit on interest deductibility, and qualified improvement property fix. So those are some other things that are available to those that use those tools. Next slide, please. Okay, another thing available to all employers here, and this is not talked about a whole lot. This was a late addition to the bill, so it hasn't had as much focus as some of the other programs, but this is the employee retention credit. Again, how do we incentivize employers to retain their employees rather than lay them off and give them an opportunity to keep them on the payroll and keep them within the business before sending them to unemployment. What this is an employee retention credit. It's available to employers who are fully or partially shut down as related to COVID-19 or who have had a 50% drop in gross receipts compared to the prior year. So that's who would qualify for this. It's a refundable tax credit for 50% of the wages, including employers' health plan expenses, paid by the employer up to $10,000 per employee. So think about it in the sense that this is basically a $5,000 tax credit to the employer. Employers with 100 or more employees, this applies to employees who are not providing services. So they'll think of it this way: if you have someone who works for you but is home and not providing services, but you're still on your payroll, this applies to them. If you have employers with 100 or less employees, it would apply to all employees paid during the eligible period. Similar to what I mentioned before, employers are not eligible to receive this employee retention credit if they receive a Paycheck Protection Program loan forgiveness, which we will discuss again. And this allows for advance payment of the credit as well. Next slide, please. For some of the mid-size and larger employers specifically, $500 billion was in the bill for loans, loan guarantees, Federal Reserve credit facilities. $454 billion of that is to the Treasury specifically for that. The remaining $46 billion to make that 500 is available in some special programs for the airline industry and critical national security businesses. And with those loans, there are going to be some restrictions on stock buybacks and executive compensation. And I think we're likely to see even more in newer programs through the Federal Reserve that are going to support additional lending by financial institutions to businesses. So this is for the larger employers, and that is that. We'll move to the next slide, please. This is where we'll spend the bulk of our time, the Paycheck Protection Program. This is a new program that Congress set up in this Phase 3 bill. It's available to small businesses, self-employed independent contractors, and some nonprofits, not all. So $349 billion in loans to a small business, which is generally less than 500 employees, 501c3 nonprofits, self-employed, sole proprietors, independent contractors. What these are loans that you can get that are equal to the lesser amount of 2.5 months of your average payroll, or $10 million. These loans are going to be distributed and lended by local and national lenders. This is not a program that's being run through the SBA like a separate program we'll talk about later, but it's going to be run locally through your lenders in town there in Dubuque and in the area there. And I would suspect that Molly and Barry and the team at the Chamber have begun having conversation information out to members in terms of who's doing it. Typically, if you are already a preferred or SBA lender for the SBA, you're already doing this. And I suspect and we believe that the SBA is going to be granting access to this program to a lot of other lenders as well, because they have a lot of money to distribute and to loan out, and there's going to be a rush to the banks and to the lenders for these loans. The guidelines just came out last night, and I believe the loans are as available as early as today, but there's still I think some confusion on the behalf of the lenders and the SBA and getting on the same page with some of that. So it's important to note that as well. But what's unique about this program is there are very minimal requirements to apply and to receive a loan. No collateral is needed, no personal guarantee is needed. But what's great about these is these loans will convert to a grant equal to the amount spent on payroll, rent, interest on mortgage, and utilities for 8 weeks after the origination. So if we'll use the 10 million number because the math is a little bit easier for me, but if you get a loan for $10 million and you spend 8 million of that loan on the items of payroll, rent, interest on mortgage, and utilities for 8 weeks, that 8 million will be forgiven and transitioned into a grant, and you won't owe that back. So again, this is a way that the government's trying to provide liquidity to say, we want you to keep paying people, keep paying your mortgage, keep paying your utilities, keep your business alive and well, so that when we come out of this, you're still here and can continue in the economy when we're kind of out of this uncertain period. One thing to note is that your loan forgiveness is reduced proportionally if the employer reduces the number of full-time employees. So if you lay off employees, your forgiveness amount is reduced as a result of that. And similarly, that forgiveness is reduced if you reduce wages by more than 25%. However, an employer can avoid the reduction in forgiveness if they bring back employees and restore wages, within 30 days and maintained through June 30. So if a lot of employers have already had to lay off some employees, if you bring those employees back within 30 days and you can maintain their employment level through June 30, you can avoid the reduction in the forgiveness. And so this is very generous, and there's a lot of opportunities here to have a good chunk, if not all of your PPP loan forgiven. More information about this program, I would encourage you to go to uschamber.com/SB loans. I know your friends at the Dubuque Chamber have this information as well, but this is a 3 or 4 page document that should and probably likely will answer every question you have in terms of, am I eligible for it? What are lenders looking for? How much can I borrow? How to figure out those calculations on the payroll costs. One important thing to note when figuring out the 2.5 times average payroll is you can only account for salaries up to $100,000. So if you have an employee who's making $150,000, you can only include $100,000 of that in the calculation of their salary to figure out your average monthly payroll. It also includes what's not included, or what is or I guess better said, what is excluded from your payroll costs. So how do you figure those out? So there's a lot of information in there in terms of when the loans will be forgiven, how much, all of that. So I would encourage you to go to uschamber.com/SB loans. There's a great deal of information there. Next slide. The next loan program that we'll talk about are what are called EIDL loans, economic industry disaster loans. These are not new. Typically, people will avail themselves to EIDL loans with natural disasters, floods, hurricanes, tornadoes, things of that nature. So they're not new. They've just expanded some of the elements to it. But these are available to small businesses and nonprofits, including faith-based nonprofits. And this is all nonprofits, I should note, not just the 501c3s that was in the PPP program. Again, with fewer than less than 500 employees, sole proprietors, independent contractors, again, very, very broad reach here. This program, you can receive up to $2 million in working capital loan up to a 30-year term. And you can see the percentages there, 3.75% or 2.75% for nonprofits. Payments for this are deferred up to 1 year. Again, this is about providing liquidity for businesses in terms of keeping their doors open, keep their employees paid. Loans are based on credit scores. No tax returns are required. You can get up to a $200,000 loan without a personal guarantee. No collateral needed for $25,000 or less. What's also unique about this program is there is available to you a $10,000 emergency grant that's given within 3 days and does not have to be repaid. So if you apply for an EIDL loan and you get your $10,000 emergency grant, if you do not qualify for the EIDL loan for whatever reason, you do not have to give that $10,000 emergency grant back. This is obviously for an emergency, and you can use that as you see fit. This program does interact with the Paycheck Protection Program, so you can have a PPP loan that we talked about and an EIDL loan, but you just need to be careful in terms of how you structure those because you can't spend the money in the same way, okay? So you'll need to make sure you talk to your lender, talk to your accountant, whomever, to figure out what money you need and how you want to spend it. Again, the PPP loans, a lot of that can be forgiven if you spend the money on payroll and interest on your mortgage and all of those items. So you want to be sure if you do get an EIDL loan that you're wise in terms of how you spend that, because you can't double dip and pay for the same elements. This program, a little bit different, is applied through the SBA, sba.gov. So if you go to that website, there's a lot of information there. And I would encourage you to check that out. And again, work with your lenders, work with your accountants before you make a decision on which loans to go through. We'll talk briefly here about paid sick leave. This is from the Phase 2 bill. This is employers, again, small employers with less than 500 employees are required to provide 10 days of paid sick leave if the leave is related to COVID-19. Sick leave can be taken if you're ill, if you're quarantined due to exposure, or have to take care of a sick kid who's out of school, or quarantined family member. So this was a lot really designed before all the stay-at-home orders have been implemented and all the schools were closed. And so this is a little bit old in terms of addressing our situation's different from what they were addressing here, but leave's paid at the regular rate of max of $511 per day if you're taking care of yourself. If you're taking care of somebody else, it's paid at 2/3 of that, up to $200 per day. Payment up to the maximum is reimbursed by the federal government. This leave is in addition to any other leave that you provide as an employer. And there is this one small exemption for business with less than 50 employees. You may be exempt from the part where you have to provide leave related to caring for a child whose school or daycare is closed, if providing that leave threatens the viability of the business. So if an employee is ultimately incredibly viable to the business, and if them leaving threatens the viability, then you can be exempt from that one narrow portion of the paid sick leave bill. And paid sick leave is not available if an employee can telework. It's important to note. Next and last slide here, we'll talk about FMLA. Similar to the paid leave, just expanding FMLA to provide up to 10 weeks of paid leave if you need to take care of a child due to a school closure caused by COVID-19. Again, leaves paid at the 2/3 of the regular rate with a max of $200 per day and $10,000 in aggregate. Again, this paid FMLA is in addition to any leave you already provide as an employer, not in place of. Payments will be reimbursed by the federal government up to the maximum, and the same exemption allowed for businesses with 50 or less employees. This paid leave is not available for an employee who can telework. And so that's it from there. Next slide will be our last slide, which is where to get more information. uschamber.com. We have a great deal of information on uschamber.com. I'd encourage you to go there. And then similarly, small business resources, uschamber.com/co. There's a ton of information there about all these programs, how to apply, where to get information. And if I'm not answering a question of yours today, I suspect the answer may be buried in those websites somewhere, because there is a ton of information available there. So with that, we can open it up to questions.
John, we just had one question so far. Can payments made to independent contractors count? From Greg Burkett.
Yes, yes, it's part of payroll. As part of figuring out the payroll for the PPP loans, yes, independent contractors are included in that.
Thank you. If anyone does have any other questions, please send them through the chat function.
Hey, John, this is Barry.
Yeah.
Can you talk a little more? I know that some of our colleagues out there have chose to furlough because some are actually going to be making more than they would be just waiting this out. Can you just talk the differences in there one more time? I'm sure you covered it once, but can you kind of like put that on the runway level for me?
On the expanded unemployment?
Yes, sir.
Yes, what it is they've reduced or eliminated a lot of the restrictions that previously existed for unemployment. So if I believe, and I'm not as familiar with how unemployment works specifically, but I believe if you're self-employed, you had some limitations on your unemployment. They've removed a lot of, if not all of those restrictions on who qualifies, which is one big part of it. The second big part of it is the federal government is adding an additional $600 per week on top of what your state unemployment benefits are, and your state just has to accept that money from the federal government and say they'll take it. So the federal government will give the states that money, and your state unemployment insurance offices are still going to provide those services. You'll just get an additional $600 until that point where your work availability returns, and then you are no longer eligible for the unemployment. So there was that concern again about what if someone's making more on unemployment, what's their incentive to come back? Their incentive is that those benefits go away the second that they're eligible to return to work.
And speaking of benefits, does the company they're not receiving any kind of medical benefits while they're on furlough, correct?
I don't, Barry, I don't know the answer to that because I'm just not as familiar with how it would apply the same way it would have before in terms of if someone seeks unemployment, is my understanding.
Thank you.
Yeah.
Sammy, do we have any more questions?
Let me see here. From Ben Graham, what about health insurance expenses? Is that included in the monthly payroll expense?
Yes, health insurance, health expenses are included in that. I'll just kind of run through quickly, maybe to answer some questions too, in terms of what is included for employers. Salary, wage, commission, or similar compensation, payment of cash, tip, or equivalent, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment required for the provision of group health benefits, insurance premiums, retirement benefits, payment of state and local taxes assessed on compensation. Now, one thing I would note is not included is important. Your payroll taxes are not included in that. And and again, you can only include up to $100,000 of salary for an employee. But it's very inclusive, frankly.
He also wanted to know, is health insurance included as a component of wages?
It is included as a component of figuring out your payroll cost. I don't know if that is a different than saying, is it a component of wages? But when you're figuring out what your payroll cost is, and what you basically do is you'd go back to 2019 and average your 12 months of payroll, multiply that by 2.5 times, include health expenses and all that other stuff, exclude anything over $100,000, and that's how you would get your average.
Okay. Let's see, Gary Collins wanted to know if you could comment on the DOL definitions of who is exempt from FFCRA. For an example, the providers.
No, I don't have an answer to that. I'm sorry.
Are private schools eligible for the PPP?
For the PPP, well, I don't know how private schools are organized. If they are 501c3, they would be eligible. That the only nonprofits that are eligible are C3s. I don't know how they're organized formally, but like a C6, like a Chamber of Commerce, we've had a lot of conversations about that, does not qualify for the PPP, but does qualify for the EIDL loans.
Okay. Let's see. Tom Wagner wanted to know if he applies for the EIDL and receives the $10,000 forgiven advance, then applies for the PPL, understands the first $10,000 of the PPL cannot be forgiven.
I'm not sure about that because they are different programs. I'm not sure about that. I would think they're different programs, so they would not be related if you got an EIDL loan and a PPP. But I don't want to give you a bad answer, so I haven't had that question yet. That would be another question to check before you apply for both, to check with your lender and accountant in terms of making sure you're, again, using both funds wisely and not on the same purpose.
Thank you. Another question, does the FFCRA Act apply to employers that have under 500 employees as of April 1st, or the employee count when an employee requests the leave? We are just over 500 as of April 1st, but our numbers change week to week.
I think that number, I believe that 500 number, and you'll want to check this, but I believe that 500 number is an average. So if you're over 500 right now, I think if you're at 501 now and we're, what you do is, I believe you would take an average of like 2019. And what was your average head count I believe is how that applies, but you'll want to verify that. So I don't think it's necessarily due about I don't think there's a magic number about April 1st or about when, specifically when you're applying for the loan, but I think it's an average number in terms of figuring out that 500 count.
Thank you. Another question, does life insurance, long-term disability, and unemployment qualify as a payroll expense?
I'm not, I don't know. I'm not seeing that it's included, but I'm also not seeing that it's excluded. It's not mentioned specifically here, so I don't know. I'm sorry.
I believe that is it for questions that we have.
And two, just to repeat what John said earlier, all these questions, we will be in touch with John and get everybody the answer to the best of our ability, because I'm sure it's out there somewhere.
I will have a copy of all the questions, so we will have a record
Great.
of those as well.
And for all our chamber friends on the line, this webinar is recorded, and so we will have this available via social media and our website so that it can be viewed again. It can be shared, and chamber members that might not have been able to join us today have access to this information. John, thank you so much for joining us today.
Thanks for having me. I hope it was somewhat helpful, or at least got folks thinking about some of the opportunities that are out there, and encourage you to get in contact again with your lender, with your accountants, and with your Chamber of Commerce to get connected to the right people. And thanks to Barry and Molly and everyone at the Dubuque Chamber for having me, and for all that you're doing there on the ground as a resource to your businesses as well. Because if we're going to get through this, it's going to be everyone together. So I appreciate all you're doing as well.
Thank you so much, John.
Thanks, John.
Thank you.